There are a lot of misconceptions about how multi asset investing works and who it's suitable for. So, in today's conversation, we thought we could look at how multi asset investing could work for a different set of investors' risk appetites, how it can be used by families to create wealth, and for intergenerational transfer. So, my first question is that when it comes to multi asset investing, you sort of understand that there is a certain risk reward that's there, right? And it kind of hits that sweet spot because you're able to give an investor a decent return. At the same time, you're not taking them through that same level of risk that they would get from, say, a pure equity product. So you're able to get that return hungry checkbox tick. At the same time, you're also able to manage risk effectively. And when investors deviate from this balance, right, that is, they chase returns, but they're not prepared for the risks that come with it, there are a lot of mistakes that get made. So, how can we address these mistakes through multi asset investing?
Firstly, it's a misconception that multi-asset investing is only for investors with a lower risk appetite. That is a wrong understanding. Multi-asset investing is basically ideal for situations where the risk capacity is changing or the risk levels need to be dynamic in a portfolio. And I think that is the case with almost every one of us. So, you need to have an approach which can work at all times. I know a lot of people say that, oh, this year is good for multi-asset investing. It's not like that. So, my understanding from what my experience is that for almost 90% of Indian investors or even a higher percentage of people, multi-asset is the ideal way to invest even in equities. I'll tell you the reason. See, most Indians are used to being heavily real estate oriented in their overall wealth. Financial wealth is actually a secondary asset even in their overall wealth. Now, this financial wealth has to grow and match their real estate wealth, and it has to beat their real estate wealth. Now, if you have to do this, you have to do this in a way which is very concerted over a decade or maybe even longer. You have to
Correct.
invest in financial assets consistently and you have to achieve scale in financial assets. When people do pure equity investing, they always choose the wrong risks. It's only the risk management that is the problem. It's not their willingness to invest capital. You saw that people invested heavily in small and mid cap in the last 1 year,
Correct.
right? Now, this is exactly what should not happen in a equity portfolio. Because if you invest in the wrong parts of the market, when you should not be doing it, you will waste 2-3 years correcting that mistake or waiting out till that mistake gets corrected on its own. Now, suppose the mistake doesn't get auto corrected, then you may actually stop investing out of frustration. So, this should never happen. Whereas, if you are going to do multi-asset investing, you will have the option to avoid certain parts of the market when it is the time to do so. And you go out of an asset class when you are not comfortable with the valuation prevailing in that asset class. I am sure you will go out of every asset class at some point in time.
Right.
It's not as if you will own all asset classes in equal proportion or something like that. The asset allocation can be dynamic, but you will be using multiple assets to your convenience and to your risk preferences, and you will be invested at all times. Now, last year we were very comfortable investing in multi-asset, whereas if you ask me to build a portfolio of only small caps, it was a challenge. And even in the flexi cap approaches, you have to wait to buy every single script. So, it was stalling, whereas multi-asset you could invest comfortably. How much ever capital you get, you are able to deploy
That's
within
true.
reasonable time. So, that flexibility and that nimble character is often underappreciated because we think that it is only for lower risk appetite and lower risk taking. That's not true. So, the risk taking can be dynamic, and you can take high risks when you need to, and you can moderate the risks when you need to. So, on a need basis, multi-asset has far more resilience and it has more capability than just a pure equity approach, and yet it brings you the benefits of equity investing almost in full. If you look at a longer time horizon, like we were looking at what the results were in the multi-asset approach which we followed in our RIA over a decade. And we found that we were able to manage a higher return than the best managed equity product
Wow.
over longer duration, not 1-2 years, over a longer duration. Whereas the likelihood of an investor actually catching that equity product and staying in it over the longer duration is very low. I don't think anyone has done it.